Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The dollar bulls remain firmly in control. Yesterday, we had another day of the bulls celebrating as we observed good sell off in all majors as well as emerging market currencies against the greenback. For the rupee, we closed above the 83 barrier. JK, our listeners will be very keen to hear your thoughts on rupee. What is your sense of things going forward? Are we heading higher?
Good morning, Swaraj. Yes, rupee is in a very crucial level now. It's not as though we haven't seen above 83. We have seen several times in the past, but what could make a difference? I'll come back to that. But I think as we start the full liquid market of September, global economies are facing fresh challenges. Perhaps for inflation as well, because oil importing countries with the two major oil producers, Saudi Arabia and Russia, staying with their production cut. Saudi Arabia will extend its cut till December, while Russia will reduce its oil exports further by 300,000 barrels per day. So the upward momentum in the global oil prices has been seen at the strongest since the onset of Ukraine war, that has sent the prices above 90 for the Brent crude. And it's not a good news for oil importing countries like Japan or India. Both the currencies are on the weaker side. Japanese yen, of course, went above 147, closer to 148, inviting some comments from the Bank of Japan officials as well. Now, we had also not a great start to the trading yesterday with the poor data from China and Europe. China services activity expanded at its slowest pace in 8 months in August, and the CX Global Services PMI dropped to 51.8 from 54.1. And this is the lowest reading since December when COVID-19 was in play. Although the official, manufacturing PMI has beaten expectation, the services activity has been now on the downslide. And this has been seen in most of the economies. And even Europe was not far behind. And the decline in Eurozone business activity accelerated faster than initially thought on the services side. And it came at 46.7 in August from 48.6, and this was lower than what was initially estimated. Eurozone PPI also confirmed a deceleration in prices, falling at coming at 0.4% negative, and on a year-on-year basis, it was negative 7.6% versus 3.4% in July. While this was already expected, the confirmation of the deceleration prices does keep the pressure on ECB to hold rate steady when they meet later. Now, on the yields, we had another big push higher, around 9 basis points on both the 10-year and 30-year. And, this is not supporting any of the currencies, particularly on the EM side, because US yields going higher draws back money into the US, and the EM currencies are getting sold off as well. And the more likely culprit for the push higher in the yields on the day was the deluge of investment grade bond sales and nearly 37 billion of corporate issuances that happened overnight. And data shows that Tuesday was shaping up to the busiest day of issuance since 3rd January. Even European yields and UK yields moved up in sympathy, but not really supported by any economic fundamentals. Now, on the currencies, yuan weakened again, and it saw a push above 7.32 today based on dollar index move. Dollar saw broad-based strength. Asia Pacific currencies were once again, on the defensive side. The USD gained 0.6% in terms of the DXY, and New Zealand dollar, Australian dollar, and Japanese and all fell into fresh lows for this year. Euro having broken the 200 DMA at 1.0806 very convincingly, pushed lower towards 1.07, and it just holding about 20 points higher from there. And then trend is clearly down based on the underwhelming performance of the Eurozone economy, which continues to get more and more confirmation, while the US continues to be a better performer, as well as higher yields in the US attracting more money. And so it's only a matter of time, I feel, that the Euro sees 1.06 being tested. GBP will be just a follower of Euro, and 1.25 break is what indication to for a move towards 1.23 on the GBP. Yen pushed above 147, overcoming the fears of intervention. And of course, as it pushed to 147.80, some voices have been heard from the Japanese officials and saying that, all options are open and speculative moves will not be encouraged. And this has not been so much reacted to by the market. It still trades towards the higher end. And if they remain words, then we may well see the USDN pushing towards 150. And that is where I feel chances of intervention get real. Now, coming back to the rupee, which you were asking, yes, we pushed above 83 once again. This is not the first time, of course, but it does look different in the sense, we had a push above 83 last month also, and then we slumped to 82.40, based on liquidation of long positions by the, interbank players. But since then, we've been finding very shallow dips, and buying has been very aggressive. Not just the normal import buying, but also corporate outflows and also the equity market outflows, all of them contributing. While we haven't had any major inflow, all the supplies mostly is coming from the nationalized banks who have been selling at various levels sporadically. Now, higher base continuously close above 82 for the first time in 10 months, and then closing at the highest month, having a monthly highest close in August. All of these technically support, the dollar rupees downside to be very, very limited. And looking at the overall picture in the global economy, oil above 90, dollar index, on the way to 105.5 or even 106. Chinese yuan, once again, breaking 7.32. All of this really makes a good setting for a new high to be seen in the USDINR. Of course, that can become a reality only with the blessings of the central bank. But I do maintain a very strong bullish bias for the USDINR. Thank you.
Thank you, JK. And starting with one major negative factor for rupee, which is the oil. So Saudi Arabia and Russia both have reduced their oil supply, leading to higher oil prices, which is bad news for oil importing countries like ourselves. When we come to China, China's services activity expanded at a very slow pace, PMI hitting lows seen during the COVID pandemic. When we come to the Eurozone PPI confirmed deceleration prices. So all this has cemented bets on ECB keeping the rates as it is. When we come to rupee has moved higher, trading above rupees 83. And what's different this time is that it has been finding shallow dips, and buying has been quite aggressive, as JK mentioned. So there is a higher base formation supporting the downside for USD-INR to be capped. Global factors are also not favorable when it comes to Chinese yuan, oil, and the dollar index. That's it from us today. Tune in tomorrow as we could keep discussing the latest in the financial markets. Thanks for listening.